Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture of me, Ryan Huang. And we are zooming in on dividends. Where can you find some of the best attractive options out there in Asia? That's the conversation we're going to have with Christina Woon. She is the portfolio manager for Eastspring Investments. Christina, good morning. How are you doing today?
Hi, I'm doing well. Thank you so much for having me.
Yeah, quite a year we've had so far. Of course, with Donald Trump in office, we've seen a lot of back and forth with geopolitics, tariffs as well. How has it played out for you in the first quarter in terms of what you've been doing at the start of the year, and where are things right now?
Sure. It's a good way to kick off speaking about the tumultuous year that we've had. So the first quarter actually had China being very strong. Obviously, things are slightly different now. We've seen that within the Chinese market, there's been quite a number of tailwinds, expectations of policy stimulus, a number of domestic companies doing quite well as well, and then an increasing rhetoric of shareholder return. So that's done quite well in the first quarter. Then going into the second quarter, though, with Liberation Day and tariffs becoming front of mind for everyone, that risk profile changes, and I would say that volatility has taken quite an uptick since. Being invested in income stocks and having dividends lending an element of stability has actually been quite useful through these volatile times because dividends tend to fluctuate a bit less than earnings, and that lends an element of stability to the overall returns profile.
Yeah, that's a good snapshot. So you started the year with a bit more optimism around China, but of course with the tariffs and the US-China trade tensions, that kind of takes a bit of a step back. So you have cut exposure to China?
So I guess into Liberation Day, managing risk is quite important as well, especially since China was quite a strong outperformer at the start of this year. So the focus has really been more within the Chinese market now, looking at where you can find idiosyncratic return thesis. So are there domestic companies that also give you good shareholder returns that are a bit more insulated from geopolitical tensions, things like that. And then the other aspect is we can't also lose sight of the fact that through this volatility, valuation opportunities do come up as well, especially in those that have more global exposures. And in that case, also that's where we might be able to find some opportunities to pick up quality companies or better cash flow generative companies at better valuations as well.
Okay, so it sounds like the playbook for the second half of the year is to focus on companies with a bit of a domestic ecosystem that's more insulated against international exposure.
Yes,
where would these companies be?
Yes, I think you're absolutely right. Where these companies would be, a good way to think about that is when we look at Asia as an opportunity set, the benefit of being able to play in this market is that it's really diverse. You know, if you think about Australia, it's a developed market, but it also tends to have quite a rich domestic base of companies there. If you look at India as well, it can be on the more expensive side of things, but you're also able to find cash flow generative companies there with decent yield, and it's one of the more domestically focused markets that you have within Asia as well, and it's growing well over the long term too. And then how can we forget China? You know, it's front of mind, as we've mentioned before, of geopolitical turmoil, but the opportunity set there is in my opinion, one of the deepest that we've seen. You've got the mature companies, and then also the perhaps EV stocks that also give you growth as well as a bit of dividend. And then you even have these staple companies that are purely domestically focused, but a very different profile from what you would see in the higher growth names. So I could go on about the different countries and opportunity sets, but the point is going to the second half, diversification and balance across all the opportunity sets is absolutely key to navigating volatility.
Yeah, when we talk about dividends, right, banks and REITs are some of the common places to go, but I'm thinking as well, banks are also to some degree exposed to what's going on. You know, sentiment among businesses not so great right now. We've been hearing about some holding back on hiring, tightening their budgets, just taking a wait and see attitude, which I think to some degree will affect banks. So how does this place banks in the dividend scheme?
Yeah, I think you're absolutely right. When we think about global economies as well, banks tend to get hit from a sentiment perspective. They are decent yielders as well, and I think the key thing there is to really be careful of what you're looking at, and rather than just buying wholesale into what you would typically think are traditional yield opportunities like banks. So, for example, if you were in Indonesian banks, as an example, last year the Indonesian market was quite a laggard. Going into this year, you're seeing attractive valuations. You're seeing the Indonesian banks in the recent earnings season raising their dividend policies. That's been positive for share prices as well. So you can really pick and choose within even a traditional yield space like the financial sector to find opportunities to generate both income and alpha.
Okay, talking about opportunities, where do Singapore banks place right now? I'm looking at DBS. Year to date, it's up some 1.3%. Over the past 12 months, up 24%. So is it an attractive option, I suppose, in the landscape of banks?
Sure. I would contextualize that in the universe for Asia. Sure, the Singapore banks have done well over the past year. A key part of that is also really because of the backdrop that we're in. When things are volatile, when people are concerned about tariffs going on, Singapore actually as a home for perhaps more stable returns within a good governance wrapper is something that can be quite attractive for investors seeking something a bit safer. What we've seen actually from the end of last year within the Singapore banks as well is, even though they've done well, they've also been talking a lot more about capital returns and shareholder returns, and that's actually supported the sector, even though it's done well. So that's something that is quite a good mainstay for adding stability to portfolios as well.
Yeah, those share buybacks helping to provide some support. All right, where do tech names in Asia figure in your portfolio? Because they are to some degree as well facing the trade tensions, for example, in the chip space. How are you seeing this right now? Is this an opportunity for you?
Yeah, it's a really interesting point because especially within the income investing realm, people don't typically associate high growth tech names with having a dividend as well. But within Asia, what we're finding, especially within the Taiwanese market, is you get exposure to companies that play into the US AI supply chain as well. And they're growing fast. And you also get a dividend on the back of that because Taiwan tends to be quite a dividend rich market. The interesting thing that has happened with Asia this year is what I would call a bifurcation within the tech supply chain. You know, you've got what we know as the AI supply chain in the US last year that did very well. But what we saw at the start of this year was the emergence of the Chinese AI ecosystem. And that's also done well for example, the internet names within China as well as the whole supply chain. So even with geopolitical tensions, concerns around perhaps AI demand within the US space, the universe for tech stocks within Asia, because of this bifurcation, still gives investors opportunities to find income as well as alpha.
All right. So another option, apart from the Magnificent Seven, you can look at the Asia tech space. All right. As we look forward to 2025, the second half at least, what's going to be the playbook for you?
It would be, I think, important to keep this balance going through for the rest of the year. I do expect volatility to continue to persist. So where I see valuation opportunities, this is where we would try to capitalize on that. Again, given the fact that dividends do give you some level of stability within the strategies, it's something that we would be looking towards. As tariffs come through after the 90-day waiver or as deals get made, this will no doubt put pressure on earnings or margins across, globally. Companies that tend to be a bit more cash generative are also able to weather that a bit better. So these would be where we would be looking to construct the portfolios.
All right, quick overview of where things are right now and where you can find some of the best dividend options. Helping us out this morning, Christina Woon. She is the portfolio manager for Eastspring Investments. Christina, thanks for your time this morning.
Thank you so much.
Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.